What's up, guys? It's Sunday, December 3rd. I want to run over some ideas, market ideas, real quick, and talk about this pullback that everybody is expecting, and why we might still have a blow off top before a reversal, before a pullback, but it might already be in. So let's go ahead and talk about this. So first of all, this is a chart of the SPX. This will be going into the week of December, or the month of December. As you can see, we are at a major area of resistance. So if you zoom out here, you can say whenever we ran up to this line here, we got rejected. We got rejected again. They tried to gap over it, but then they fell back through it, right? We got up to it again here, and they fell down, and they were able to close the week above our line. That's bullish, except for where we are. So we need to prepare for two things: either a continuation, not to necessarily new highs without a pullback. Our next major area of resistance is going to be right about here. As you can see, rejection there, rejection, rejection. Every time they get over this line, that's how resistance kind of works. They get over it and the sellers come in. They think the market is at a premium here, and so they want to sell. But really, you could argue anything over this first peak back in September of 2021, this is all premium. This means this is profit-taking area, right? So likely they're going to run into a pullback situation in this area. Now, that's a 100-point move, so we can't rule out that they can run to 4,700 before we have the pullback. Sorry again about my fan, if you can hear that. Well, let's take a look at some things here. First of all, we see volume. Let's take a look at this candle of volume, right? What did that do? That broke the uptrend and made a reversal in the market. What do we have here on Friday? Large volume on a surprisingly small candle. And if you guys remember trading GameStop, that was usually the huge warning that, hey, they're about to pull the rug, right? So we want to keep an eye on this volume and say there's something going on right here, that it looks like all of the buyers got bought, all the institutional buyers. Friday is always kind of a floater Friday anyway, so you know there's not many sellers wanting to sell. Right now it's 3 o'clock Central Time, so markets are not open yet, but I'm curious to see if we open down here again this week, or for this Monday. But anyway, what we need to realize is this is considered an ending move. We had a reversal, obviously, volume picked up here in this area and reversed the tape, and now we have exhaustion. Basically, the last buyer decided to go all in long, and that means the momentum and the person, the bank, the institution that was propping up the market is no longer going to be there. So we need to realize that they don't want to be buying anymore up here. There's only going to be retail and sellers up here. Anyway, so keep that in mind. Again, that doesn't rule out a shoot to 4,700. And we can retest this area here, and we'll probably get rejected pretty hard. So look for that. The reason I think we have more to go, and we could be proved wrong as soon as the market's open here, but is we really, that's what it was. We flipped this to support. So if you look at the back here, so this was the rejection here, right? And every time they get over it, they reject. And right here, see, here's another rejection. Right here, they turn that into support. So it is possible to shoot it another 100 points and have a true blow off top. But in the long run, I think the top is in. Safely to say, within 100 points, the top is in. I do not think we're going to go to new highs by the end of the year. I think we'll probably have a 2-week pullback, and then maybe your Santa rally. If you were to get one, the buy area would be around here, let's make that one green. That would be the prior top there, which is now support. They got underneath it, but they held over it, and then it eventually became support on its own and pushed here. So what I'm saying is, we could, without this buyer here, we could very quickly, slide back through here, and we could have 4,600 to 4,300 or 4,400 fairly quickly. So keep that in mind. If we were going to go higher, I would say, obviously, anywhere from 4,640 to 4,600, they're going to push it down. There's something called the JP Morgan options collar thing that is possible that it has an influence on the market, that they are selling 4,600 calls, so they want to dump shares to try to push the market down so they don't have to sell those calls at a loss. That would be on the 17th, I think. I don't remember what day exactly, but whatever, 15th, something like that, when they expire. I don't remember. Anyway, so what we don't care about that stuff, though. What we really care about is, one, they never back tested this this breakout, right? They just kind of gapped and just went. They never came back down to retest. So that would be another positive for a bounce down there. But again, it's a 200 to 300 point move. So don't be overly bullish right here. Expect maybe some more push up, but don't be overly bullish. If you want to jump over to something real quick, if you want to learn something, this is called the fair value gap. And I encourage you to look into this. It occurs when there is inefficiencies or imbalances in the market. And basically what it means is there's a spread between the ask and the bid, basically. This is oversimplifying it. But here's a picture of it. Let me see if I can find a picture. Right here. So see this breakdown candle here? Where did they come in short? They came in short in that candle, right? But it's a fair value gap is the gap between the first candle, or the candle prior to the move, and the candle after the move. This is called a fair value gap. That means there's really no buyers and there's really no sellers. Or the sellers are up here, the buyers are down here, and there were no orders in between, right? They just shot through it, right? And as you can see how this worked, they came into it and then they rejected, right? And so, for example, let's go to the futures contracts here. And I have right here a fair value gap. If you look at this right here, this candle right here, there's a gap from the bottom of this candle right here to the top of this candle right here. This area is called the fair value gap, right? If that doesn't make sense, just Google it and watch some of these videos. So, in my opinion, the place to short, if you were going to use futures as your short for SPY, is in this area, 4640 to 46. And we might already be there. It might have already been the top. But basically, we need to start thinking short. The only way, and this is nice because if they were to get above this and flip this to support, then you know that we're going to go ahead and keep moving higher. So it's an extremely low risk area to go in short. Because unless they gap over it, they could gap over it on Monday, or they could break it and then turn it into support. But either way, that would be your stop loss. Would be the top of this candle or the bottom of this candle right here. And what they do is think about all the people that were short. Think about all the people that have been short in this whole move down. Let's just imagine they held. Imagine they held their short position from here all the way down to here, and they didn't close, and they're all the way back up here again. Where would their stop loss be? If you were shorting shares of something, or even options, but shares especially, your stop loss would have been right here. So what happened? Stop losses got hit and we shot it up, right? You might have a stop loss here at this pivot. You might have a stop loss here at this pivot, which is why it was also resistance here. But it looks like those stop losses got hit also. Now they ran a test of this one, this pivot. So those stop losses are getting hit, and that can push the market up even higher. And then you finally have this pivot before the top of the market, which would be the ultimate stop loss area. And that's why breakouts happen, because all the people who didn't take their stop loss yet are finally so red they just have to get out. Margin calls, whatever. So imagine if you were a market maker, where would you want to get your short shares at? Would you want to short the market at 44.40 here to move down to 4,000? Or would you want to short them at 45.60? You'd get a better, if we were going to 4,000, let's say, that was the target, right? Would you rather short here, or at the very top? At the very top, because at that point, anybody who was short is now out. So those short shares are available. Now we've hit everybody's stop loss, literally everybody. I guess there's these one guys right here left. After we hit their stop loss, then all the short shares are available again to buy at an institutional level. And they could grab everybody's stop loss, everybody that was short, take all of their short shares, and then start selling off. And all these people would chase, and they'd say, oh man, I just hit my stop right here, but we're already back down here now. So I'm going to get back in, and they're going to go. And then they're going to catch these guys and say, oh, well, they're back to where I was. I'm going to get back in here and going to keep going, right? So very quickly, we can move back down. After they've hit everybody's stop loss and they've swept the market, they've forced all of the short sellers out. They got in, and now they're putting the short sellers back in to drag it down, right? And where they do that is this fair value gap, right? If you want to look at another example of a fair value gap real quick, let's find one on a smaller time frame and see if it works. Right here. So check this out. Before a reversal, let me zoom this in. Okay. So, starting here, the bottom of this candle and the top of the after candle, they're overlapping, right? They're overlapping. This to here, it's overlapping. This one to this one and this one are overlapping, right? This one, I don't know why my pen isn't working. Anyway, they're all overlapping. right? All of these are overlapping. This one here is overlapping this one here, right? Here. This one is overlapping. This one is overlapping. Until we get to this candle. This is the first candle where there's no overlap. From right here to right up here. There's no overlap. That would be called a fair value gap. Right here, from the bottom of this, or the top of this candle to the bottom, the empty space where there's no buyers and sellers. There's sellers up here and there's buyers down here, but there's nothing in between, right? So what happens when they come back into this area? That's where they reverse the market. They came down into this area and they pushed the market back up. They came down into this area and they actually swept this candle. Look at this. Here's the, let's see, the bottom of this candle is, low is 45.50. The low of this candle is, well, this is 45.50.25. This one is 45.50 exactly. So literally a quarter of a point, a tick, right? They came in, they knocked out the stop. Anybody that had a stop loss right here, they knocked them out. They took their shares and then they reversed the market. Right? Anybody that was long and had their stop loss right there, when they got to this fair value gap, they took the people that sold here, they bought those and then they shoved the market up. Right? And look at that move. So this gap is where it reverses and goes the other direction. You can find that everywhere, especially in the futures market, because that's how the futures market works. Right? That's a ton of information that you could get into on your own. And you basically want to just say, or just spend your own time doing that. But anyway, so what I was trying to say was, if you go on a daily chart and you see this breakdown candle, what do we know about breakdown candles? For one, they always want to run a test of it to see if they can get above it. That's just a given. Bulls always want to get above a breakdown. Bears always want to get below a break up candle, right? Like these guys. They tried to run a test of this breakup candle and they failed, so it got pushed higher. Does that make sense? So now, if we get into this fair value gap area, and they could even get to the very top of it, look for a long-term swing short at least a few weeks out, and it might even be the top of the market. Because if you were to, first of all, again, we didn't ever retest the breakout here. We just went higher. If they come back and retest and this is support, then we can push higher. But either way, they're going to have a reversal in this area. If you zoom out, we still have our high, a lower high, a lower high, and a lower high. Even in this area, we are still in a bear market. This was just a bounce in a downtrend. Right? Let's take this one off and let's put the 50 on here. Let's look at this huge move right here, which happened to be the exact same move right here. Look at this. What was this? 4160 to 4630, right? 4100 to 4600. It was the exact same move. And what happened? They were in a downtrend, and so they got rejected and they continued lower, right? Where is the 50 right now? The 50 right now is in a downtrend. It's starting to curl, but it is still in a downtrend. And you could just make an argument that they're going to put in lower high on the 50, right? We are still in a downtrend on the 50, even though it's starting to curl. So, I would say, in my opinion, this is a good place to short. So let's look for shorts. And then for fun, I'll look at some longs. And actually, let's look at the longs first. ENVX. I've been talking about this for a long time. We had a nice move up on Friday, but we ran right into resistance at 1240. So they need to open up above 1240 and get out of this channel to break higher. But I do like ENVX over 1250 because we had a heck of a move from right here, 13 up to 23, $10 move. Here's right here, 1330 up to 25, right? That's 15. This is 13 to 22, and then even higher than that. This was up to 35. So look for an area of 13, getting above 13 and 13 becoming support. You can see a very large move to the upside. So keep ENVX long on your watch list. Getting back below $12, knocking out at least half of this, I would say it's probably going to just fail and put in a new low. So, it might not work. But just keep in mind, over 13, ENVX could really run. It's heavily shorted. Talking about heavy shorts, let's look at GME. GME has broken the trend. They were in downtrend, obviously, and we were underneath the 50. And again, the 50 is in a bear market, so this is just a bounce in a bear trend. But it could get pretty wild. We broke on huge volume. We reversed the tape, broke above the 50, came down, and now it's support. So as long as we stay above $14, GME should run back a test of the $18 area and could push even higher to 22. So that could be a huge move. If you look here, there's a large liquidity gap between 18 and 22. So getting above 18 should put us at 22 probably in the same day or overnight. So keep that one in mind. If it holds 14 another day or two, look for a squeeze, because what happens at the end of the day, at the end of the market, everything starts to squeeze. Everything starts to squeeze when, that's not what I was looking for. Yeah, whatever. Anyway, everything starts to squeeze before the blow off top. That's what a blow off top is. All the shorts are getting out. They're forced to get out. And then we reverse, right? When GME rips, SPY dips. Yeah, I don't know. We won't worry about that one. So ENVX long, GameStop long, AMC I gave up on. I'm done with that one. There were some other ones I was going to look at. HKD. HKD looks interesting for a move up. And it can get pretty stupid quick. But if you look at this one here, you could argue that, we had this area of support. They broke it, and then what happened? After that, there were no more sellers, so the buyers came in and shot it up. Well, that one didn't hold. So then we had another area of support. They broke down below it, and now we're starting to get some volume in. So keep an eye on this one. They might want to run another test of the low of this breakdown candle. If they cannot close a day below it, let's get in long and see if we can catch it. You could also just say, getting above this breakup candle here, we could see another move there. So running a test of the bottom and bouncing would be a good place to get in, or you could try to get in early at like $4.90 or $5 and see if we can just catch some momentum. That might happen on Monday. So keep that on your list, HKD on Monday. What was the other one? Oh man, we missed ELF. I totally forgot about this one. Look at this nice move. It came down here, retested this 117 area, and shot up to 123. We do have room up to 133, so you can keep ELF, ELF, on your watch list. Alta was a huge move that I didn't think about, but yeah, that was huge break. I mean, my goodness. So ELF, people are going to be chasing. They're going to be chasing ELF. So we want to watch that one to at least 133, if not higher highs. And if you see here, we're talking about fair value gap. There really isn't one here. Because if you look, which makes me think this isn't the top, because there's nothing to trade against except for the high, and then once you're above the high, then then you're wrong. So this is an overlap here. This is an overlap here. It's overlapped. Everything's overlapped. See, this one to this one, this one to this one. So really, actually, I guess the first one would be right here. So it would still be 129. So let's say they're going to run a test of if this was 130, they're probably at least going to run a test of 130. So let's get back in ELF, however you want to pronounce it, and see if we can get to 130. If we can get above 130, then all the shorts are going to be caught and they're going to spike it, right? If you look on the weekly chart, it looks pretty bullish. We had huge support on the 50-week EMA, so we can see our next move higher. And then Christmas, of course, ELF. So keep that one on your watch list. Carvana, I don't know what this one's been up to. It's reversing above the weekly 50 EMA, so that would be a bullish move right now. On the daily, they are fighting to get above the 50, so watch this one, CVNA. Let's see what they did here. They broke up, came back down, and retested the breakdown area, and that's now support. So look for CVNA to move higher. And of course, if all these small caps look higher, then that means the market in general is going to move higher, right? Which fits our theory that they're going to run a test of the fair value gap. So keep that in mind. I mean, some of these stocks like Carvana have a long way to go. I mean, look at this. Look at this huge move. Just from there to there. So if we got from there to there, $200 from a $35 stock, that's crazy. If we just get to $60, that would be a huge move, right? So look for CVNA long. And again, if we break out above my short area, then that means bull, right? So you can't really be that wrong on these small cap stocks, because they're either not going to work or they're going to run 1,000,000%. So keep an eye on that. IWM, this one broke above our buy the dip area, and which we didn't, again, because I didn't trust it. At the same time, let's see if this is going to retest. Now see, they already got back above our breakdown area, which would be like this. So that could be a squeeze up to 195. And we did have this ghost candle, March 2023. That's a high liquidity area. So 195 is going to be a high liquidity area. So keep an eye on IWM long and small caps in general. Again, I'll just keep repeating it. When the small caps squeeze, though, that's usually the top of the market. So keep that in mind. If you're going to be bullish, don't be bullish for very long, until it's just obvious that we are bullish. If we get above the last high in SPY, then we probably are bullish and we're going to run a test of the next high. So don't stay short too long. It's supposed to be a low risk trade. All right. If they get above this area, 46.40 in the futures contracts, then I'll say, I'll just look for this to become support for another push higher. And we won't go in short yet. So keep that in mind. Let me know what questions you guys have. If you have any other ones to look at, NVIDIA and Tesla. As far as large caps, I don't see anything wrong with Tesla or NVIDIA right now long at the moment, because what they did was, well, okay, I guess I do see one thing wrong. They didn't close above this candle. But if they do it on Monday, then I guess that's still bullish. But if you look at NVIDIA, we had this area where they get above it and they sell off. And it was 468.41. Look how important this is on the 1 minute chart on Friday. So even right here on Thursday, 468.41, 468.41. That's where they were rejecting. So they came into that and it became support. And then now, actually, yeah, it is resistance again. So the Qs might be weaker than SPY. Let's take a look at the Qs just real quick. Yeah, they are a little weaker. So here's our channel on the Qs, and they've already broken down from that. So they could still get up here. This was our original channel. They could still get up here and retest the channel at 393 area later this week, even 394, and then get a rejection, right? So SPY could get higher before it went lower, and that would also make sense if they ran a test of this fair value gap right here, this breakdown candle. They would run a test of that somewhere around 393 to 394. Look for a short there at the convergence of this channel back test, right? So yeah, maybe there is something wrong with the Qs. Tesla, I really thought would be above 250 by now. Oh look, they did. Darn it, we missed that one. Gosh dang it. How was I not paying attention that day? Look at this support here, all the way up. They finally got to my number, 250. So that move's actually complete. So yeah, I am starting to think bear. So here's what we're going to do on this one. Watch this. That's going to be our short. 245. Watch for a short over 245. Now if they get over 249, then you have to be careful, because then they start getting into these levels, 260s. And they do have a triple bottom here. So watch Tesla long if you want. 1, 2, 3. It still has room to move higher, and in this expanding wedge deal. If they put in a lower high, like they get rejected at 249 again, that'd be a good place, or 245 especially. 245 down to 211 would be a nice move, and that would be kind of a nice reversal. You had stage 1, stage 2, stage 3, and then stage 4 move back down to 211. So keep Tesla on watch short too. Yeah, this would be a good area for support to buy at this 198 area. Let's watch them retest this 198 to 200 area if you want to play that short. So yeah, anyway, don't be too bullish. If we get crazy, then just short it. If it looks too high, well, I can't say that. Just follow Jake's group, and I'll let you know when I go in short. Let me know if you have any questions. Thanks.